No surprise, we have a lot to say about purchase price multiples, and it's not because we think they're going down. We can all agree pricing was extremely high when the private markets peaked in 2021, especially in sectors like technology. What matters more is where we are today. Overall prices paid for buyout deals have effectively moved back to those peak levels, rather than normalizing meaningfully lower. From our perspective, buyout multiples remain elevated. They didn't fall much after 2021, and when they did, they rebounded quickly. That's true globally and in Western Europe, where they're now at record levels. At the same time, we're operating in a higher for longer rate environment. Financing costs are meaningfully above pre-2021 levels, yet leverage has not chased valuations higher the way it has in past cycles. Equity checks are larger, and the equity cushion is thicker. That's healthy from a risk perspective, but it also means you cannot rely on cheap debt or financial engineering to bail out a rich entry price. As Warren Buffett put it, price is what you pay, value is what you get. Everyone worries that high prices mean future returns must fall. We don't see it that way. In our view, higher prices often reflect a market rich with high-quality businesses, but they also leave a much thinner margin for error. That means value creation has to do the heavy lifting, especially because we do not expect significant multiple expansion in the near term. Recently, valuation uplifts have been driven primarily by earnings growth, not by higher multiples. When values have moved down, it has largely been about multiple compression, where earnings disappointed. This is a blunt reminder that some companies were simply bought at too high a price. In this environment, fundamentals matter. GPs who can buy solid businesses with resilient revenue, durable competitive advantages, and pricing power, and then drive both operational and top-line growth can still generate attractive outcomes, even if they need to hold those assets longer. In a high-price world, Buffett's distinction between price and value will separate managers who merely pay up from those who deliver compelling returns. Looking ahead, we do not expect a broad reset down in multiples. When we survey general partners, they agree with us. The majority expect purchase price multiples to be flat to higher from here, not lower. That matches what we've seen in the data. In key sectors, it has been buyers who have capitulated, lifting the prices they're willing to pay rather than sellers cutting their expectations. In other words, this higher multiple world is likely to be sticky.